Hello and welcome to another exciting episode of the Accounting Buddy. Today we're going to be looking at value added tax, which is currently charged at 15% in South Africa. The South African Revenue Service is the agent or institution rather which is tasked in collecting such tax. More on our VAT, our tax system in South Africa has two types of taxes. Your direct and your indirect taxes. Now, this forms part of our indirect taxes, and it's usually or generally rather imposed on suppliers and manufacturers at each stage of production. And this tax is an indirect tax because it can actually, the burden of the tax is actually shifted at the end of the day to us, the consumers. Right. So I gave you a brief on the VAT and what it's all about. You can read all about that on the video. Now, the next part is that the VAT is charged at a standard rate of 15%, but not all products or services are subject to VAT at 15%. You've got your zero rated goods, you've got your exempted goods, and we also have our taxable supplies. So, not every good or service is actually taxable. Now, here's some of the examples of a zero rated supply: your exports, your basic food items, illuminating, paraffin, goods which are subject to fuel levy, which is your petrol, your diesel, international transport services, farming inputs, and certain grants by the government. And it's also good to know that not all countries, even the most developed countries, charge VAT. Like the USA, they don't have a VAT system over there. Exempt supplies, not to be confused with your zero rated goods. Exempt supply include educational services, residential, rental accommodation, and public roads and transportation. Now let's look at a more practical example here. We've got Cheddars Liquor Mart Pty Ltd as alcohol or beer costing 170 VAT inclusive. This means that the cost of VAT is already accounted for in this amount of 170. Now I want us to learn how to get the VAT component in terms of monetary value or rand value in this case, since we're using the South African rand. Now the common mistake would be for students to come and multiply the cost price by 15% and simply tell us that now that's the cost price, and that is an incorrect way of dealing with the matter. The right way, however, is to divide 15 by 115 multiplied by the cost price, which gives us the VAT component in monetary value. In this case, it's 22 rands, 17, which means that 22 rands, 17, 17 is the monetary value of the VAT which has to be paid over to SARS of that 170. So it's inclusive. Now, on the next one, what if you are looking to do it the reverse way? You want to calculate the cost of an item exclusive of VAT, which means you want only the cost price which will ultimately go into the business and not the VAT component. Now, it's a reversal of the first calculation. We multiply 100 and we divide 100 by 115, multiplying it by the cost price. Now, same example as the first one, we have 147.82. Now, this is the amount that is going to be accounted as sales or revenue for the business, and the 22 rands, if you add it up with this one, will give us the total cost price inclusive of VAT. So now, exclusive of VAT, this is when you want to remove the actual cost price, excluding the VAT from the pricing that has been given. Now, those are just one of the simplest ways of going about this calculation, guys. If you have any questions on this one, please do let me know on the comment section. Guys, thank you very much for watching this video. Please, if you like this video, please give it a thumbs up. You can leave comments for me on the next video, suggestions that you want me to make, and please don't forget to subscribe. Bye bye.